And we are here again with a free Forex training video, or you can say a tutorial video. This is Leading Forex YouTube channel. My name is Kofi, your admin for this channel. Today, we are going to look at something very interesting. First of all, we're going to look at a recap of our lessons from part 1 to part 46. That is where we are currently. This video is part 47. But as it stands, it looks like a few of us are having difficulties with regards to where to even start from in terms of Forex. So I'll do a quick recap, okay, of what you should be looking out for or what it is, okay, so that you will know exactly where to start from. Is that okay? Secondly, we will be looking at another video on moving averages. And that topic, we need to quickly finish it and go to other topics. So today we'll be looking at Forex moving averages, and we'll look at ribbons. I told you we'll be talking about ribbons. So moving average ribbons is going to be our next topic. Today we're going to combine these two in this video. So expect a recap, and then also we'll continue from the moving average ribbons as a topic. Is that okay? I think we should end there when it comes to moving averages so that we can talk about other things. Although we have other things to look at in terms of moving averages, but I think we've done enough with moving averages. So I want to say that maybe this video might be my last video on moving averages. Unless, of course, you have something very interesting you want me to talk about. You can let me know at the comment section on this video, so that I can look at that, okay? But if not, I think we will end our moving average videos here and continue with a new topic. Is that okay? So quickly, like I said, I want to do a recap of the tutorials we've been having so far on this channel from part 1 up to part 46. Now, the very first thing you need to know when it comes to Forex trading is this. Let me share my screen with you. I want to share my white screen with you so that I can quickly do some demonstrations. Okay, so this is the white screen, all right? So what I'm saying here is that when it comes to the Forex market, is that okay? The Forex market is something very simple, but very complex. I'm combining two words here, simple but complex, okay? Now, I want you to just take note of when it comes to currency pairs. There is something very important you always have to have in mind. For instance, if you have a pair like Euro USD, okay? For instance, when you have a pair like Euro USD, and not just Euro USD, when it comes to Forex trading, we trade currency pairs, okay? We have 8 major currencies. When you compare or combine them, you're going to get about 28 crosses. Is that okay? Or 28 pairs. So most people trade only the 28 currency pairs. There are others who trade less. There are others that also add even the exotic pairs. So whatever you might be trading, you only have to take note of this. There are always 2 currencies that are combined. When it comes to currency trading, you will always get 2 currencies combined. So in this case, we have 2 currencies here, which is the Euro and then the USD. Each of them is a currency, but when you combine them, we get what we call currency pairs, okay? Now, those of you who have watched the videos, you will realize that these 2 pairs have their name. The first one that you will always see is known as base currency, okay? And then the second currency on the right is always known as the quote currency. Is that okay? So every currency pair that you will take, you have these 2. The first one known as the base currency, and then the second one known as the quote currency. Now, these 2 currencies, they do one thing, and that is what I want you to take note as a trader. These 2 currencies, anytime you take a currency pair, this concept must come in your mind. Take note. The first currency, which is the base currency, is always having its path, okay? And then the quote currency is also having its path. What are the paths or the roads, if you will call it? Now, the first currency, which is the base currency, it has a path upwards. It's always trying to go up. And then the quote currency is always trying to go down. Take note of this concept. The base currency, which is the first currency, is always trying to go up or move upwards. And then the quote currency is always trying to go down. So it's like there's a friction between them. They are moving in opposite direction. One is going up, the other one is coming down. Now, once you have this in your mind, I want you to see this as a game that we call tag of war or tag of peace, okay? Now, when it comes to that game, we have two people on different edges, okay, of a rope. So this is one person here. This is another person here on another edge of the rope, okay? So we have two people here on different edges, and there is a rope in the middle. There's a rope in the middle, like this. When it comes to tag of peace or tag of war, whatever name you want to call it. Now, these two people at the extreme ends of the rope are trying to do one thing. The one on the right, which is here, is always trying to pull the one on the left to his or her side. Are we good? And then also the one on the left over here is also trying to pull the one on the right to his or her side. So what happens is that when this game is at play, what is going to be the outcome of it? The outcome of it is that whoever becomes the strongest, okay, whoever becomes the strongest will end up pulling the other to his or her side. So in case the one on the right becomes the strongest, you will see that he will pull or she will pull the one on the left to his side or her side. And at the end of the day, if it is the one on the left that becomes also stronger, you end up seeing him or her pulling the one on the right to his or her side. That is when it comes to the game of tag of peace or tag of war. Is that okay? Now, I want you to see that same concept when it comes to currency pairs. When you take a currency pair, be it GBP, JPY, GBP, USD, GBP, AUD, whatsoever currency pair you will take, see it as a tag of war between the two currencies, which is the base currency and then the quote currency. So the base currency is always trying to go up, and then the quote currency is also trying to go down. So if the base currency ends up becoming stronger than the quote currency, then it means the base currency will pull the or the push. It's okay. So going up will be a push, right? I want to be sure with my words. So if the base currency becomes the strongest, it will end up pushing USD along. And then at the end of the day, you see the two of them going up. When you see Euro USD going up, it means that the base currency is the strongest. That is why the currency is moving upwards, or the currency is in an uptrend. Is that okay? The same way when you see the currency going downwards or in a downtrend or bearish, you should also know that it is the base currency, it is the quote currency, which is the second currency here, that is strongest. And for the fact that it is strongest, it needs to pull Euro down the lane because that is its path. So one is trying to move the currency to its path. The other one is also trying to move the other currency to its path. Just like tag of peace. The stronger will end up pulling or pushing or whatsoever, bringing the other to his or her side. The same thing with every currency pair. So they are in opposite direction. One is moving up, one is moving down. So the base currency is always trying to move up. The quote currency is always trying to come down. So whoever becomes the strongest will end up taking the other to its path. So if the base currency, which is the first currency, becomes strongest, it will end up taking the quote currency, and then you see the trend going up, which means bullish. So when you see a trade going bullish or going up, that should tell you that the base currency is the strongest. And that is why the trade is going up. And whenever you see the trade going down or bearish, that should tell you that it is the quote currency, which is the second currency, that is the strongest. That is why it is pulling the base currency along the road, which is the downward movement. Is that okay? Now, once you have this concept in your mind, once you can see this picture clear, then the next thing you will ask yourself is, okay, if this is the case, how do I know that when it comes to Euro USD, how will I know that it is the base currency that is going to be strong or the quote currency that is going to be strong? How will you know that? That is the next question you will ask yourself, because you want to trade Euro USD. And it is either Euro USD will go up or go down. And if it's going up, it means the base currency is strong. And if it's going down, it means the quote currency is strong. Now, how do you know that it is going to be the base currency or the quote currency that is going to be strong? That is the next question you should ask yourself. Now, by knowing which currency will be strong, it takes three main analysis or three main, how do I put it, formulas, okay? Or three main strategies to be able to identify and to know which currency will be strong, whether in a day or in a week or in a month. It takes three major strategies or formulas. And these strategies are the analysis that we do, which are the technical analysis. So we have the technical analysis. Am I right with the technical? Yes. And then we have the sentiment analysis. And then we have the fundamental analysis. Fundamental analysis. So it takes these three analysis to be able to decide which currency is going to be strong in the course of the day or week or month. So there are people who prefer to use technical analysis to know whether, for instance, Euro USD will go up or go down. And just like I said, if Euro USD, for instance, is going to go up, then you know that it is the base currency that is going to be strong. And if Euro USD is going to go down, then you know it is the quote currency, which is the second currency, that is going to go down. So, or that is going to be strong, all right? So there are people who will want to use technical analysis to determine the direction. There are others who want to use sentiment analysis to determine the direction. And we have those who also want to use fundamental analysis to determine the direction. There are others who want to use all the three. Some will want to use only 2 out of the 3. So whether you are going to use just 1, 2, or the whole 3, that would depend on you as a Forex trader. Am I clear here? So when it comes to currency trading, this is the basic concept you need to know. So the question to ask yourself is, am I going to use technical analysis to determine the direction of the market, or I'm going to use sentiment analysis to determine that, or fundamental analysis, or you want to use 2 out of the 3? And using 2 out of the 3 could be technical and sentiment, or technical and fundamental, or sentiment and only fundamental. It could be any. All right. So it is up to you to decide whether you want to use 1, 2, or 3. Are we good? So today, I wouldn't want the recap to be so long, but this is the first part of the recap I will want you to know as a trader. So now, when you go to your MT4 and you pick any currency pair, the question that must come into your mind, or the picture that must be in your mind, will have to do with the tag of peace or the tag of war thing I showed you. And that is how the currencies will behave. One is trying to go up, one is trying to go down. So whichever becomes stronger will end up pulling or pushing the other to its side or its lane. So the question is, do you want to use technical analysis to determine which one will be strong or the direction, or you want to use sentiment, or you want to use fundamentals? And again, that will bring us to when it comes to, for instance, okay, when it comes to technical or fundamental analysis or sentiment analysis, there are also a lot of topics within that, okay? There are a lot of what? Topics within that. And you will have to decide all that by yourself, all right? You have to decide all that by yourself by knowing which type of technical analysis tool you want to use, or what type of fundamental analysis tool you want to use, or what type of sentiment analysis you want to use, all right? So this is the basics. I'm trying to kind of give a recap of our tutorial so far, so that when you are trading, you get the bigger picture, so that you get a clear picture. Yes, what we've done so far is very broad and it seems confusing, but with the little I have just said today, I'm sure the picture will be clear in your mind. All right. So ask yourself, what do you want to use to trade? Is it sentiment? Is it fundamentals? Is it technical? Or you want to combine all the three? That will be a decision you should take from now onwards. But you cannot be able to decide if you have not taken your time to learn all the three. When you take your time to learn all the three, then it will give you a clearer picture to know which one will be the best for you to go. So when it comes to forex trading, a million of traders that you see on the internet, they all have what they use to determine. There's no one formula. There's no one straight way to determine which currency will be strong and which one will be weak. All right. A lot of things are involved, but you cannot learn all. That is the picture I want to paint here. You cannot learn all. So it is up to you to decide. After learning all this, then you now know which one to use, whether to go for technical, sentiment, or fundamental. Now, I am a trader that usually feel bad when I'm losing in the market. And so if you realize of late, I have been a bit quiet on the channel and also on the Telegram page and all other places. The reason I have been quiet is because I feel the market is not that good for me, or it is not that stable for me, because a lot of things are happening at the background that I need to take my time. Now, that doesn't mean that the strategy I have is not good. This is the time that if you're a trader and you have a particular strategy that is giving you the profits, and then just at a point you realize that things are not going well, don't be in haste to change that strategy. For all you know, there must be, or there might be an underlying factor that you might not be aware of, or you might not know is happening, but it's happening. So all you need to do is to take your time and take things easy. Stay off the market if they need be for a week or two and study what is happening in the market. If not, you end up changing your strategy. And then by the time that strategy, the market will be back for good for you to start making profits. You would end up seeing yourself even getting worse because you ended up changing or messing up your strategy. So whenever you see that things that are giving you profit are not giving you profit anymore, take your time and study the market for a while. All right. It doesn't take any pain to stay for a week or two without losing money. All right. It will be better that way than for you to still think you can do it every day and still be losing money. That will cause you a lot of pain. So that is me. But if you think there are a few ways to twist or tweak, let me put it that way, tweak your strategy to get it better, that will be up to you to decide. Is that okay? But for me, this is my advice to you. Whenever you have something that is giving you profit, and then just at once things change and you are not seeing the profit anymore, take your time, study the market for a while. before you begin to mess up your own good strategy. Is that okay? Thank you. Now let's go to what I want to show you today with regards to the moving average. Now today I said we'll end our topic on moving averages, and I want to talk about the ribbon, moving average ribbon. I want to end on that. So in my next video, we'll be doing a new topic, and also I'll be giving you another recap. Okay, a recap of what we've learned so far from part 1. If you haven't watched our playlist, go and watch the playlist. The playlist is Forex Training for Beginners. That is the name of the playlist on this channel. So watch the part 1, part 2, all the way, part 3, part 4, all the way to part 46. This video is part 47. Is that okay? Good. So now, the Forex ribbon, or the moving average ribbon, let me say that. Let's go quickly. I won't let this video be so long. Let's go to that and end this video. All right. So here we are on this topic. Already, all we're doing here is free Forex training. And then we have moving average ribbons. So that is where we're going to end our topic on moving averages. All right. So what are moving average ribbons? Now, you know how to get in touch with me. If you want to get in touch with me, these are my contact details on Telegram, email, phone number, and then WhatsApp. So you can always get in touch with me if there need be. Now, quickly, moving average ribbons. Now, the word ribbon, we already know, is a line that is used sometimes to design a parcel or to tie, or you know what a ribbon is. Now, sometimes you have to intertwine them or fold them in one direction in order to be able to tie or wrap whatever you want to wrap. The same way with this moving averages. Now, the concept of the moving average ribbon is very simple. We have multiple moving averages, okay? You put as many moving averages as you want on the chart. And then when these moving averages all tend to one direction, along with the market, then you know that this is the trend of the market. But first of all, before you will do that, you will see that the ribbons must tend. So in this case, you see that there was a cross of all the ribbons, all the moving averages. The down ones came crossed, and then there was a cross over here before all the moving averages started pointing one direction. And then the price, which is the candles, were up there, and then the ribbons were down. So the ribbons being down here means that it is an uptrend. Look at the same thing here. There's a ribbon here, and you see the change in direction over here too. So you see that all the ribbons tend, and then price came down, and then the ribbons were up. So when the ribbons or the moving averages are up, and then the price is down or the candles is down, that indicates or tells you that it is what? A downtrend. And when all the ribbons are down or the moving averages are down and price is up there, it also tells you that you are in what? An uptrend. Is that okay? Now, let's see one or two more slides, and then that will be for this video. All right. So now look at this one too. You can see. Look at how all the moving averages were up. They crossed here. There was a change in direction over here. And then all the ribbons started pointing down, up. Sorry, they were all up. And then the price was down. So which indicated a downtrend. And again, they all changed here. And then price went all the way up. And then all the ribbons were all down. So this also changing direction here indicates what? An uptrend. Is that okay? Now, if you want me to give you this ribbons you are seeing here, then let me give you the specifications to use, okay? This ribbons you are seeing here is moving average 10, moving average 20, moving average 40, moving average 50, moving average 60, moving average 80, and then moving average 90, and then 100, and then 100. So this is the ribbon you are seeing here. So if I write them well for you to see, we have the 10, we have the moving average 20, moving average 40, moving average 50, moving average 60, moving average 80, moving average 90, and then moving average 100. So these are the moving averages that have been used to form this ribbon that you are seeing here. So maybe you can try these moving averages ribbon on your chart and see if they can give you something good. All right. So the time frame for this chart is 1 hour time frame, okay, on the 1 hour chart. So you can try this on the 1 hour chart and see if this moving averages can do you something good. All right. Again, maybe you can go on other YouTube videos and then check. Maybe there might be someone out there having another good ribbon. Okay. Once you get the person's ribbons, you can try them on the chart and see, and then test the market and see if you can be able to make something good out of the market. Is that okay? So these are the specifications. These are all moving averages, not exponential moving average. This is simple moving average. All right. These are all simple moving averages, but you can choose to use them on exponential and see, or use them on simple moving average and also see which one will be better. But these ones you are seeing on the chart here are just simple moving averages. Is that okay? All right. Now, the final slide, and then we end this video. This final slide for us to end this video. Now, this is the final slide. Now, the things to take note of is, first of all, the cross of the ribbons or the cross of the moving averages. And then also here, you see that the ribbons are expanding. When the ribbons are expanding, it is to tell you that there's a potential reversal of the trend coming. When you see that the ribbons or the moving averages are beginning to expand, they are beginning to open. That is what you should know. All right. So once they open up like that, and then they close up and then they cross like they have done over here, then you know that an uptrend has also begun. And when you see them parallel, here like this, that should tell you that the trend continues. When they are very parallel like this, that tells you that the trend continues. But when they begin to go zigzag, then you know that there is a potential noise in the market. So you need to hold on. All right. It's possible the trend is about to reverse, or maybe there's some noise in the market. So once you begin to see those zigzags, they're crossing each other in a very rough way, you need to wait until you see a good cross, and then the ribbons begin to unfold and then begin to go parallel again. Then you can look at the next trend. Is that okay? So you can try the ribbons, the specifications I have given you, or go to other people's videos, search for moving average ribbons, and then try them and see. Maybe some will be better than what I have shown you. All right. Then you can begin to experiment that by doing forward testing. Is that okay? Subscribe to this YouTube channel. We are back again after Easter. We are good to go. So stay here and more videos will come your way. Thank you, and I'll see you in our next video.